I'm Judy Shaw for What's the Fund. Joining me today is Paul Benson. Paul is the head of fixed income efficient beta at Mellon Investments. Paul, it's so great to see you. Thanks for joining me.
Hi, Judy. Thank you so much for this opportunity today.
A quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Paul, tell me, what's the fund you want to talk about today?
Yes, the fund we'd like to talk about today is the BNY Mellon High Yield Beta ETF. The ticker is BKHY.
Tell me about this fund.
Yes, so high yield is a very, very attractive asset class in our view that from a risk return perspective sits somewhere between equities and more traditionally defensive areas such as IG and treasuries. Now, high yield also offers certain structural risk premia that actually allows it to offer slightly better returns from a risk-adjusted perspective. So it sort of pushes the boundaries of what we call the efficient frontier. Now, the corollary to that is that it is not the easiest investment class to invest in. High yield gets these greater returns because there are a lot of bonds that are less liquid in that index, in that universe. Now, due to the COVID-19 crisis and the uncertainty that we're seeing in the current economy, we certainly have seen spreads go wider, which has provided a very attractive entry point for a lot of our investors. So we have a lot of attention on high yield right now. Now, the high yield beta strategy that we offer is a very differentiated approach to investing in high yield. First and foremost, it's a broadly diversified approach. So we typically have upwards of 1,000 bonds in our strategy. Now, what we can offer with the high yield beta strategy is we're trying to provide this unassailable value proposition to our clients where we know that our clients are thinking about not only the returns and the risk-adjusted returns, but also the fees involved. So we're of course trying to keep our fees low so that we can offer this better value proposition, a stronger portfolio. Now, there are other ETFs in the market that have attacked the high yield space and tried to deal with the difficulties of investing in high yield by concentrating on a more liquid portion of the universe. That's all fine, but it then doesn't allow investors to reap the full benefits of the broad risk premium that high yield offers. The more liquid universe will tend to underperform the broader universe over time. So what we do is we invest in the broader universe, and the way we overcome some of the challenges there is by employing our credit model, which we have designed and built over the last decade and a half in our firm. A lot of high yield managers have teams of credit analysts that try to sift through certain companies and decide on companies that have higher quality, that are fundamentally better investments. What we do is we've transported that into a model-based framework so that we can evaluate all of the companies in the universe on a daily basis. Now, what this allows us to do as we're investing in a broad set of high yield companies and high yield bonds, it allows us to differentiate which companies do have higher quality than others. And by quality, I'm thinking about things such as fundamentals, such as balance sheets, which companies have lower leverage, which companies have higher profitability. Essentially, which companies are more likely to be able to continue to service their debt going forward. At the same time, our credit model also evaluates bonds on a relative pricing perspective. So while you may have a company that looks very, very healthy, its bonds could be priced egregiously high. And so what we are able to do as we invest is we're able to acknowledge the fact that some of these bonds are already trading very expensive and may not provide great returns going forward. Therefore, by combining those, we're able to build a more solid, robust portfolio that delivers better returns over time.
Okay, and finally, where can our viewers learn more about this fund?
Yes, so we have more information on this fund as well as the other BNY Mellon series of ETFs on that's investment management, .bnymellon.com/ETF.
Okay, Paul, I want to thank you for joining me on What's the Fund?
Thank you so much, Judy.